Oh, okay, guys, I'm sorry about that. Okay, thank you, R Pink, so much. You guys, welcome in, everybody. Did you guys hear any of that introduction? Anyways, Merry Christmas to you all. I'm sorry, guys, about the sound. It should be good now. Let me know, is the sound okay? I'm just gonna wait here till I see. Thank you, R Pink. I appreciate you, man. Thank you for really getting my attention with that. All right. Let's see. Sound. Yep, sound. There we go. Okay, we got it. You guys got me now? Sound all good? Check, check, check. Nope. No sound still. All right. Sounds good. Thank you, R Pink. Thank you. Okay, guys. Well, sorry about that. I had my mute button on and I did not realize that. But Merry Christmas, everybody. Welcome in. I hope you guys had a good Christmas. I hope you all are enjoying the holiday weekend. And let me just back up here and we'll go back to the beginning here because obviously you guys didn't hear any of that. But on Monday's live stream, I talked about how it was highly likely that we were going to remain within this bigger range throughout the holiday weekend and probably up through the New Year's. That's this range between like 95K, 94K, and like 80.5K, this bigger sideways corrective range. And I even talked about the smaller range that we've been in for the past couple of weeks being this sideways range, and that it's likely that we just trade within this little sideways range at least through Christmas and maybe even through Christmas weekend. And we are continuing within the ranging structures here, which is likely, low volume. A lot of people are concentrated on Christmas and, the holidays, family, and things like that. So we expect, kind of some low volatility chop. I really think this range is going to continue at least through New Year's, but we'll see on that. But on Monday's stream, because we knew that we were going to see a Monday stream and Tuesday's video, because we knew we were going to be seeing some low volatility, low volume, rangy type price action, we were really concentrating on scalping within this smaller range here between like 91.5 and like 85K, 85, 86K. And one of the levels we marked out was this box here around 89K, this box of resistance around 89K. Which if we pull that volume profile, if we pull a volume profile measuring this range, this sideways range, it was the value area high of the range. It was also our golden pocket pulled from the highs on Monday to the lows that we made last Wednesday, December 24th, or this Wednesday, December 24th. And it was also a swing failure pattern of some internal liquidity that we had resting right up in this area, this internal liquidity grab. So we came up last night. We did come up into that, hit the golden pocket, hit the value area high, and got the liquidity grab. But we dropped down and we back tested that anchored VWAP really locally. And then we pushed up. Now, this was the trade to get into. This happened late at night for me, so I did not get into the swing failure pattern. But we had an intraday swing failure pattern of that high, of this big imbalance candle here. So we got that swing failure pattern. If you caught that, that would have been really the trade to take, is the SFP of the high. And then what happened from there is we fell. Let me zoom in actually onto the 30-minute time frame. So we got the swing failure pattern of the internal high. We fell back inside of our volume profile. And this was important because we tried to break out once. We tried to break out twice of our local volume profile. We couldn't break out. And then we fell back in with a nice imbalance candle and some increased volume back inside of your volume profile. We had now, after bouncing from the VWAP, you had that three-wave corrective move to backtest the value area high bearishly. Now that we had fallen back inside of our volume profile, we were doing a bearish backtest to see whether we were going to confirm reacceptance back with inside this volume profile, or if we were going to break above it, maybe we were going to continue to break out here and, come up to those 91K highs, take the highs up into 91.5. But we did get the rejection on that three-wave corrective move, rejected from that value area high, and that's when you saw your big imbalance in volume come into the market, the big flush down into the market. And we've dropped below the POC of the range. We have, kind of far away from our VWAP for the day, and we're just chopping. We're seeing some low volume chop right now, almost sort of like bear flaggish type price action here. And to me, it's highly likely now, because we failed to break out of the value area high of our 2-week-long range, we took the liquidity. We did reject from the golden pocket, even creating kind of this distribution, like a mini Model 2 distribution up here, intraday distribution. And now we're dumping. it's highly likely to me that we are going to come down to take out your lows at 86,350, these lows from Wednesday. And below us, we do have some nice support coming in below us. So I'm going to be looking at taking out the 86K lows down into about your 85.7K area of support. And this area of support here is our 786 Fibonacci in confluence with the value area low of the larger range. So let me go ahead and throw that on there. Let's see, this one I can get rid of. All right, we'll just pull that. So we'll look at that 786 Fibonacci there at about $85,700. And we do have the value area low of our larger range there. So this is our smaller range that we've been in for about 2 weeks now, December 15th through, December 26th. So yeah, about 2 weeks, a little less than 2 weeks. But if we throw on that bigger range that is from 80.5K and we look at that, not that guy, there we go. You can see the value area low of that larger range is coming in right at that 786 Fibonacci. And knowing that we do have liquidity resting into this area of support, I will be looking for a liquidity grab from this general area. We are on the larger volume profile. We are kind of just chopping around the POC, and that is normal around, it's fair value for the past month and a half for Bitcoin. We are at fair value. So you really don't have an edge here. But within this smaller range, we did reject from the value area high, and we could expect maybe a drop to the value area low of that range. And so if we turn that on, value area low of that smaller range is going to be coming in right where those 86.3K lows are, liquidity grab into the value area low. But with us seeing, if we go to our liquidation heat maps here, you can see this is our Model 3 heat map. And looking at the last week of price action, you can see that we have a lot of liquidity just below us that's going to be acting as a magnet. And you can see that liquidity pretty much ends coming down, 85.9 and down really even into that 85.7. It would grab all that liquidity. So to see that liquidity get grabbed right into this support level would be really nice to see. And then we could maybe see a scalp long trade and still possibly come up to 91K to take out the range highs now into your larger golden pocket and grab those weekend highs from 3 weeks ago, the liquidity from that weekend highs, because oftentimes weekend highs get taken out, weekend highs and weekend lows. So I'm just looking at pretty much playing this small range still. And if we do see a larger breakdown or break up, then we can look at it when that happens. Of course, we mark out our levels. We are aware of the levels to look at, and then we just we look for confirmation on the trades. But as far as we were coming up yesterday into the value area high, we did have some very nice confirmations to look for a short in this general area up here around 89K. We had higher highs in the price action. We had lower highs in the momentum waves. You can even see on NAMI here confirmed the bear divs, and money flow, at least on NAMI, was draining out. And Market Cipher B, the money flow was still kind of, just choppy in here. But we did have the bear divs into resistance. And then that swing failure pattern was really your confirmation to get into a short. If you missed the swing failure pattern, that bearish backtest of the value area high, you could look to enter short there. And with us now on the lower time frame, if we zoom in, let's just zoom in onto the 5-minute time frame here and look at this price action that we're seeing throughout the day. To me, this is likely to be a corrective move, a wave 4 corrective move. If we're going to be looking at just our intraday impulse to the downside, a wave 1 here, a wave 2 here. This could be your big wave 3. We now be looking at a wave 4 before a wave 5. And that wave 5, I would expect to at least take out 86.3. We might not get down to 85.7. We might front run it, just take this liquidity, see a wick of the value area low, close above, maybe a 15-minute candle, and we might reverse from there. To me, it would be better to come down a little bit lower to hit the larger value area low and that 786 Fibonacci, and to grab all of the liquidity, because once again, our heat map shows liquidity really coming down into like the 85.8, 85.7 area. And then from there, I would expect we might be able to get a scalp long opportunity and continue to push up, maybe even up to 91K to take out those highs up at 91K. But for now, just trading this little range. And if we look at this push up that we're seeing right now, it's almost like just very low time frame, 5-minute time frame. It's this ascending channel that you often see in wave fours. You often see this like 3-wave corrective move in an ascending channel. And we're looking now for our targets to be between the 0.382 and the 0.5 Fibonacci. Because if we're looking at this as a wave 1, wave 2, wave 3, wave 4, wave 5 here, then that 382 Fibonacci coming in right around 87,500, the top of the channel is right in confluence with that 0.382 Fibonacci, and that could be an area where we would expect to reject and then come down and make new lows, taking out that liquidity at 86.3. Yeah, guys, I'm really sorry about the sound. Hopefully all is good now. Thank you guys for being here. Hope you guys did have a good Christmas. If you do celebrate Christmas, if you don't celebrate Christmas, I still hope you had a good week with your family and friends or whatever, you were doing. And we'll just get back to trading. Now we're back here. We're focused on the trades and really just looking at scalp mode, because I do think it's going to be a little bit of low volatility, at least through the weekend. Okay. On this push down that we've seen throughout the day here so far, you can see that 0.382 is going to be aligning with the top of the channel. And then the 0.5 Fibonacci is also interesting, because by the time we get up to that 0.5, our VWAP is probably going to be right in perfect confluence with that 0.5. And as far as intraday scalp trading goes, when you get very far away from the VWAP and it's going to remain a bearish trending day here, oftentimes you will get that move to kind of backtest the VWAP. And if you do reject from the VWAP, you can expect to continue the intraday trend, which is a downtrend. And so I'll be looking at both of those levels to look for potential short opportunities. If you didn't get into a short from this area, now you would have to do your risk management on that. If you're looking at shorting, the 382 or the 0.5 Fibonacci, I'd probably wait for the rejection, put my stop above wherever that wick is going to be, and then you'd be targeting that liquidity at 86.3 as your first TP, and then maybe a TP2 down at 85.7. So we'll have to look at that. If that happens during the stream, we can analyze that. And then I would also want to see some low time frame bear divs on this. You'd have to be looking on like the 5-minute and under. But if we're going to continue to get some bear divs as we're coming up into that area, maybe money flow leaving, that would be nice to see as well. But yeah, I mean, look at even this. We saw 5-minute bear divs here on the swing failure pattern. You can see NAMI had those as well. Bear divs confirmed. Money flow is draining out of the asset. When are we going to take the 80K lows? It's been forever. Yeah, and I understand that. It's been forever. The range has been going on longer than I expected. But the thing is we are going into the end of the year, and a lot of people do tend to take this time off. A lot of the bigger traders, the whales in the market, do tend to take this time off, or at least cut down their activity quite a bit. And for me, it's likely that this range continues, that we're not going to take out 94.6, or that we're not going to take out 80.5 for quite some time, at least through the New Year's. After the New Year's, after people reset, kind of get back into the market, that is when the resolution of this bigger range could take place. But until then, I do think we are going to be really just in this zone here between like 83,500 and 91,500. Now, the overall bias that I have, guys, is still, let me hide this little channel. The overall bias I have on larger time frames is still leaning bearish. And that is because we still have lost the Fibonacci channel. We've backtested that Fibonacci channel 3 separate times. We've rejected all 3 times. And we're just, this entire range from 80.5K looks like a corrective structure to me. There's no real motive waves in here, or impulsive price action in here that suggests that we are going to break up to much higher levels. And it would also be nice to see some more lows coming into some more macro support, maybe making that overall kind of rounded bottom structure where we could get that, inverse head and shoulders or a model 2 accumulation in here. And then we could make a bigger run up at testing. We have our 50 EMA. I think that is a 50 moving average, not EMA, the 50 moving average. I still think this is going to be an important level to be looking at, because that 50 moving average, historically, once you've lost it, on the bearish backtest upon losing it, you do tend to reject from there, and that's when the bear market really starts to kick in. So I think that is going to be a big test that we're going to be looking at, is that 50 moving average. But first, we have to break above our 94.6K highs. We'll see what happens with that. And really, I'm in scalp mindset for now, guys. Diamond Palm, welcome in, man. It's good to see you here, and Merry Christmas to you as well. Okay, I have a pretty hefty short from 89K. You think you'd be smart closing it at 86 and re-entering higher? Well, lost decks, I think that is a decent probability. Now, if you're short from 89K, if this was me personally, and guys, this is not financial advice. You know, I'm not a financial advisor. I'm just letting you guys know how I would play this trade. If I got into that 89K short, what I would be doing is I would be holding it open to at least come down to take those 86.3K lows from Wednesday, from Christmas Eve. If we do come down and take those lows and then start to reclaim it, I would probably close 50% to 75% of that trade, because it could be that this is over. We took the liquidity and now we're going to push up and take the liquidity at 91K. I would take 50%. I would probably take another 25% out when we hit 85.7. If we do, see something like that and come down and hit that level. And I would also be looking to flip hedge long, leave that short open, take a TP1 and then move your stop loss to break even. And then in this area, I would be looking to hedge long that. And that way, within your local range, you're short from the highs of the range, you're long from the lows of the range, or even long from the SFP of this low. And then just let one of them get stopped out and let one of them play out. That's the way I'd be doing it. But knowing that the overall structure, the overall bias is bearish, I still would leave after taking some liquidity, or after taking a TP2 around 85.7. I would leave the rest open and maybe, take another 10% if you got down to take this liquidity into your more macro 786. And then, of course, if you bounce, you'd be looking for that bearish backtest of the value area low of this range. You could re-add to your short here and then look for, really taking it down to your more macro support levels, at least taking out the 80.5K lows. But that will you'll get more, I guess, more insight on that as you're coming down to these levels. So if we're coming down to 86.3, that low from Wednesday, Christmas Eve, and you don't SFP it, there might not be a reason to take profit until you get down to 85.7. So if you're short from up in this area, you see your 1, 2, 3, 4, 5, but your 5 keeps breaking through here and you don't get the SFP. You just keep falling through. Don't take profit until you reclaim it. As soon as you reclaim it, you could take some profit off the table. But if you don't reclaim it, wait for the next level. And then when you come down here, now you're going to be looking to see if there's confirmation to enter a hedge long, but you can also take some profit on that short position. And I guess that does entail babysitting the charts a little bit, or at least setting alerts. So you don't have to stay by the chart. You can set your alert here. And as soon as you hit that, as soon as your alert goes off, you can check and just analyze it from there. Say we reclaim 86.3 after losing it. How would I be certain that it's a proper reclaim? Yeah, that's a bit of a tough one to answer, but we know that in a nice swing failure pattern, in a nice liquidity grab, you generally wick above that level, like, a couple $100 on Bitcoin, few $100, and then you'll start to have some aggressive move to the downside. So if we're going to do this, and knowing that this could be the end of a 5-wave move, a 1, 2, 3, 4, 5. Now, at the end of a 5-wave move, at the end of an impulse, you're looking for a corrective move to generally come up between the golden pocket and the 786. So say all of this is a wave 1, and then we're going to see a wave 2 before breaking down in a wave 3, much, much lower. Knowing that it's the end of an intraday impulse, if you start to reclaim it and you start to see volume coming in here, and I would say a 15-minute candle close above it, I would be pretty certain that you are going to get at least a move up. And we could pull at that point. This is a theoretical golden pocket, but we pull it from the highs of the impulse to the lows, and I'll just throw them a little bit underneath that liquidity. And we would be looking between the golden pocket and the 786. So This golden pocket actually does look nice. It's a little support resistance flip area. You can see here, it's a nice little support resistance flip area. Resistance, 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 support, and then so it would be resistance again as well. But I would be looking for, if that happens, 1, 2, 3, 4, 5, I would be looking for a bigger 3-wave corrective move to come up here. And then you could re-add to your short here as well if you start to reject and expect that bigger impulse to continue down. Yeah, 89K was a good short, though, especially if you got this SFP here. Man, this SFP here was really nice. Upon that, we were also seeing, guys, some bearish CVD divergences that were happening in that area. Higher highs on the price action, lower highs here. So bearish CVD. And your open interest was increasing. Higher highs here, lower highs here. Your open interest wasn't the nicest looking, but it was increasing overall. And then there was some bearish CVD divergence from, and I pointed this out in the Telegram. Let's see here. Oh, I did that. Where was that? All right. I mean, earlier this week, there was some bearish CVD divergences. Am I looking from the wrong spot? I thought there was bearish CVD divergences between, I think it was this high here. All right. Well, either way, now let's zoom out to the hourly chart. And I am using aggregated open interest. So the aggregated open interest looks at most of the major exchanges, not just Bybit. Even though we're on Bybit for the CVD, we're looking at the aggregated open interest because you can get a kind of a better overall look at what the whole market is doing as far as opening or closing positions. For me, I think I back tested this aggregated open interest, and I do think it works better than just using the open interest from one exchange. Yeah, and we did no bullish CVD absorption here because we did make a lower low. Still going lower here. But you can see really today we've had a lot of positions opening up, and it's been a mess actually today. All this is new positions opening up, so a lot of new positions throughout the day. But you can see longs, shorts, longs, shorts. We were getting some longs into that bearish back test of the value area high, and then we dump, and that's why your open interest is dropping right now. We're starting to stop out those late longers right into that value area high. Starting to dump here. So how would I get the CVD chart on Coinalyze? So Coinalyze.net is free. If you go to just type in Coinalyze.net, and then you gotta go to let's see, where is it at? You go to individual charts right here. And then once you're in individual charts, you click Bitcoin. You can use Bitcoin. You can use Coinbase Pair. You can use Bybit, whatever exchange you want to use. I tend to look at Bybit and Coinbase, but because Bybit has derivatives, I'm using the Bybit chart. And then you just go into your indicators here, and then you're going to type in CVD, cumulative volume delta. That is the one you're going to pick. That is this guy right here. And then you can look at open interest. You can just type in open interest here in there. And I look at stablecoin funded or stablecoin margin contracts, but you can use regular. No, where is that? Here, let me get rid of this one. That's the wrong area. There we go. I was using stablecoin plus coin margin in contracts here. So that's the aggregated open interest I use, but you could use regular open interest if you wanted to. Whatever you find works best for you, but that's just, you're just going into your indicators and you're putting them on the chart. And then this is just my stochastic RSI, which I look at sometimes. But the way, open interest is really important to be looking at because you can't have true absorption. So what we're looking at with open interest in CVD is we're primarily looking for bearish and bullish absorption. And what that means is, like, if you're seeing bullish absorption, let's just give an example, even though it's not happening here. You're making a higher low on the price action, and you're seeing your CVD drop here. That means CVD, what CVD is it's active longers or active shorters. So if CVD is dropping, that means a lot of short positions are coming in. And if you're making a higher low and your open interest is increasing over that time. So first of all, your open interest is the amount of positions opening or closing on the chart. And if your open interest is rising, that simply means that there's new position, new money coming into the market. If your open interest is dropping, that just means trades are getting closed out here. So what we want to see with bullish absorption is you want to be making a higher low here. Your CVD is dropping, meaning a lot of shorts are coming in. And those, obviously, if your open interest is increasing, those are fresh short positions. So even though we have a bunch of fresh short positions coming in, Bitcoin is not able to make a lower low on the price action, meaning there's some big whales that are absorbing those smaller market shorts, and that will be used as fuel to get that push to the upside, that absorption, absorbing all those short positions and then causing a short squeeze. I think CVD absorption is one of the most strong confirmations to look for a trade off of. It has, 75 to 85% hit rate. Now, CVD divergence is different. CVD divergence is you still have those higher lows in the price action, lower lows in the CVD. But if your open interest is flat or if it's dropping, you need new money to absorb in order to get true absorption. And that's CVD divergence still does give you a signal, but it's not near as strong as absorption. So for me, I like to watch for absorption. All right, I want to just check this here. Are we coming up? Yeah, let's just keep an eye on this here. It looks like Bitcoin still wants to kind of rise up a little bit. We're kind of bouncing from this midline and also our POC, chopping right around the POC. So if you're looking to enter in a short, what is the ideal setup for open interest? You're looking for bearish CVD absorption on that. And yeah, you're looking for bearish CVD absorption. So you're looking for lower highs on the price action. You're looking for higher highs on your CVD. And you're going to want to look local. Local bearish CVD absorption is good. So you can see the price action is making lower highs. So we have a check there. But you want your CVD to be making higher highs. And if you're seeing higher highs in the CVD and lower highs in your price action, and then you want to see your open interest increasing overall, meaning new money is coming in, and that would be bearish CVD absorption. So we're not seeing it right now. It's also best to see this open interest, a nice steady increase or decrease. We do have a lot of chop in here, and I've shown this many times on my channel, but when you have extended drops in open interest, like here we were raising pretty nicely on the open interest, and then you get this extended drop in open interest, and then you start to get the nice steady rise again here. Sometimes when you see too much of these extended drops in open interest, it does tend to invalidate the bullish or the bearish absorption. Now, of course, we're not actually seeing bearish absorption. This is just an example of that. But just be aware of that. And I've pointed that out many, many times in my streams and videos. What's the best time frame? I think the 15-minute time frame is the best to look at CVD absorption. 15-minute, but really, so our pink 15-minute and even then on the 5-minute chart is the best time frame. But you're really looking at it's more so not on the time frame. Like absorption generally does tend to be a better signal on lower time frames, but you're also just looking at those key highs and lows, right? So sometimes I've seen absorption play out on large time frames where you're getting absorption over like a bearish absorption over like 2 or 3 weeks. Or let's give an example here of this larger corrective range that we're seeing. So you can see from the 80.5K lows to our current lows now, we are making higher lows on the price action within this entire range. That's within this entire bigger range from 80.5K. This entire area in here, we're making higher lows on the price action. And our CVD is making lower lows in here. So we are seeing some bullish CVD divergence, but here's the key thing here. It's not absorption, it's divergence only because your open interest is dropping overall primarily in this area. And we were seeing a real nice steady drop in open interest here. Really, let's see. Yeah, this last little, I mean, this area here, you can tell it's weak in holiday price action because look at your open interest is just completely flat within this little range. Your CVD is pretty much flattened out and you're in this little range here for the last 10 or 11 days. And I think it's going to continue because we're going into the weekend, Christmas weekend. But you are seeing, so technically we are seeing some bullish CVD divergences from the 80.5K lows. We're seeing bullish CVD divergences, but it's not absorption. And divergences do not play out near as strongly and as accurately as absorption. You want to see this open interest having a steady increase. Like if we saw this, what is going on here? If we saw this over here like this, and we saw these two signals, that would be super nice. And I would be looking for a higher low to look for a nice big push up. But here's the thing. Absorption generally occurs on lower time frames. You're looking for whales to absorb within like a, 1 to 5 day, trades that have been more local trades, the liquidity that hasn't been taken yet. So obviously our 80.5K liquidity hasn't been taken, and anyone that's longed in this first general push up here, they probably have their stops below that low. And they're looking for more of a swing long where they're looking for a higher low, and then they're going to look for the breakup. So your technical stop would go below that low because you're in validation. If you're wrong, you need to get out of your trade. If you start breaking that low, obviously your idea was wrong. You get out. But until then, like with absorption, I think the 15-minute is the juicy sweet spot when you're looking on the 15-minute. And we're really just not seeing much right now. Yeah, guys, please hit the like button. Please subscribe to the channel. Also, real quickly, while we're here, I want to just talk about the partners of the channel. So the main partner of the channel is BYDFI. They are a VPN and KYC free exchange. All you need to sign up is an email and a password. If you do sign up using my affiliate link in the description, you can get a minimum of 20% discounts on trading fees, and you can actually earn up to 40% discounts if you deposit some of the larger amounts into the exchange. They're offering up to $8,100 in futures trading bonuses, depending on how much volume you trade within those futures markets. And they're offering some of the best initial deposit bonuses in the entire industry. So, for instance, if you deposit $100, you can get a 50% deposit bonus. That's the highest I've seen on any exchange for a $100 deposit. And then they're offering various 20% and 10% deposit bonuses for some of these larger amounts. I've also partnered with BYDFI to create a Telegram community where I do post my thoughts on the markets, trade setups. You guys can tag me and ask me questions in there. If you're interested in joining that Telegram community, it is free. All you need to do is sign up with BYDFI using my affiliate link and deposit $100 into the exchange. You'll get the 20% discounts on trading fees. That $100 is your money to trade with. Once you've done that, click the Telegram link in the description of this video. And once you're in that Telegram verified channel, you type in /verify in your user ID, which is right up here. And that'll get you into that Telegram community. And once you are in, you are in. Second partner of the channel is NAMI Trading. NAMI is this momentum and money flow indicator down here. For me, I use it for confirmations to enter and exit trades. So, as we're coming up into that 89K resistance, grabbing that internal liquidity into our value area high and into our golden pocket, if we're looking for a short, we want to see some bear divs coming in here. Did we see confirmation to enter? And if you see bear divs, it gives you that much more confirmation to look to actually pull the trigger on a position, on a short position. For me, NAMI has been an invaluable tool. It's a bit quicker than Market Cypher B, Money flow is actually based off real money flow, and it does, even for those of you who are not well versed in seeing divergences with your eyes only, just naked on the chart, it does actually print out those divergences for you. So Nami has partnered with the channel. They're offering 50% off if you use my affiliate link in the description, and Divine50 is the discount code. So both the link and the discount are in the description of the video. And then lastly, I have Bybit and MEXC. I partner with both those exchanges. Bybit's offering up to $30,000 in futures trading bonuses, and MEXC is offering a 10% initial deposit bonus and some discounts on trading fees. All right, guys, let's get back to the TA. We'll go into some of the altcoins here. The price of silver is taking off. Okay. How come ETH is at about 2.9K while Bitcoin is at 86K? When about 8 months ago, it was at 1.5 while Bitcoin was at 80. Well, the ETH BTC chart, if we look at ETH BTC, ETH looks like it wants to break out against Bitcoin. It is looking like, yeah, and we did get actually a nice bounce from that POC there. But for me, it does look like ETH is going to see a bit of a push up against Bitcoin and rise faster than Bitcoin is. Or if Bitcoin starts to pump, I think ETH is going to continue to pump harder than Bitcoin. And I'm still looking at this as a potential 1, 2, 3, 4, and then a big 5 wave up, probably up to this 0.52, 0.53 area. And of course, we'll have our little, rejections within there. Maybe all of this is going to be like a wave 1 in here, a wave 2, a wave 3, wave 4, and then a wave 5 within your bigger 1, 2, 3, 4, 5. But yeah, ETH does look like it can continue to push up against Bitcoin. We don't want to lose this POC. This is our more macro POC here on the ETH Bitcoin pair. And if we start to lose that POC, that's when things could get pretty bad. Let me zoom out to the 2-day chart. It's all of this upper price action here between ETH BTC. And you can see we pretty much bounced from the value area low. We were able to reclaim the POC, and now we're in the process of the back test of that POC. If we hold that, you would expect to come up to value area high, which is where that 0.53 area is. This major resistance area up here. If we lose it, if we start to lose this POC, that's not going to look good. Maybe we reject on a lower high and start to lose it. You would have to classify this as a 3-wave corrective move, and it's likely that we actually continue lower. But let's look at ETH against the US dollar. So ETH is, I still think that we did have this box laid out, and we came down there on Wednesday, on Christmas Eve. We did come down there, and we tapped that golden pocket, and it was also the value area low of our range. Golden pocket value area low. We did tap that. We got a nice little move up, but then we came down. We made a higher low, and then we moved up, and we took out these internal highs in here. The liquidity of these internal highs. And now we're dropping. But because we have now this liquidity trail, you can see all these higher lows in here. I think this is going to get swept. I think we're going to continue to push down here locally and at least take out the lows from last Wednesday, just like Bitcoin's lows. Bitcoin's lows from last Wednesday are 86.3. Well, Ethereum has those lows coming in at 28.86. And I think we're going to come down and sweep and take out those lows. Now, if we don't see the SFP of those lows, like we could just get that quick SFP, reclaim the value area low, and start to push up here. If we don't get the SFP, we're going to see a bigger drop. We're going to probably drop down to your 786, where we do have a daily level down there as well. I believe it was this area in here. And if you pull your your Fibonacci retrace from the lows to the highs, you can see that 786 is coming in at 28.38. And we also have, I believe it was a daily level in there. Yeah, a daily level at 28.26. So we 786, a daily level. And no naked daily point of control. Okay. Yeah. So if we don't see a SFP of this, because we didn't actually hit the 0.65 golden pocket, so we could still, this golden pocket overall still could hold, and we could make a move up. at least taking out this liquidity internally here, or even moving up to take out the 3178 liquidity up into our bigger resistance up at 3200. Seeing a bigger kind of 3-wave corrective move before dropping again. But we want to see a quick SFP reclaim a value area low right away. If not, we're probably just going to keep dropping until we get down to our next box of support. And then we would have to look for, as we're dropping down to that box of support down there, are we going to see bull divs on the chart? So we would want to be dropping down here. You would want to see lower lows in the price action, and you would want to see some higher lows in the momentum waves, which we are setting up right now to potentially make some nice bull divs here. The thing is, right now on Ethereum, you can see we had bull divs here, lower lows on the price action, higher lows on the momentum waves, and that gave you a nice push up to take out your local highs. So those bull divs have already played out, and it was a perfect confirmation into your value area low. Bull divs on the chart locally, you pushed up, you took out your local highs. That was a nice scalp trade. Now that we're back, falling back down in here, and you could even pull your, just similar to Bitcoin, for the last couple of weeks, we've been in a smaller sideways range here. We do have the value area high just above us and a daily just above us. I would be looking at that general area as a potential to reject around $3,000. But what I would want to see is first coming down and grabbing the liquidity and now creating another drive of bull divs locally. So we have this low from Wednesday. Actually, that was Thursday for Ethereum. But if we come down, we make another lower low, have the confirmed SFP, have confirmed bull divs on the chart, money flow overall rising to the upside, we could get the long from here and maybe take it up to value area high that was front run in your daily. Because we got to remember, we're in scalp mode right now. Excuse me, guys. Let me get a drink real quick. Okay, sorry about that, guys. But yeah, we're in scalp mode. We're in scalp mode for now. Just looking at low volume chop. Within Ethereum, we have our bigger sideways range here, and we have our smaller sideways range here. So I would be really primarily, until we start to see some sort of decision made, be looking value area high, value area low. And then if you lose that value area low, of course, you're just going to be looking towards your next little intra support level, which is going to be that 2,800-ish area. Now, on Ethereum, let me get rid of some of this, clean up this chart a bit. On Ethereum overall, we are holding the pitchfork midline. You can see this pitchfork midline has been holding us very nicely. But I do think if Bitcoin dumps, especially if Bitcoin starts dumping down and taking out those 80.5K lows, maybe dumping to 78K, I do think personally that Ethereum is going to drop to about 2250, where we do have our macro logarithmic golden pocket. Let me go just zoom out to the daily, and we'll pull our Fibonacci golden pocket from the $1,400 lows up to our new all-time highs. And you can see our non-log golden pocket is where we're bouncing from, right at that midline. But here's the thing. This move up is more than a 100% move to the upside. Anytime you have a large swing in volatility like that, it's over about 250%, you need to take your Fibonacci, and especially if you're on the logarithmic chart, you need to come in to your settings and click based off log scale. And that's going to give you your proper 61% retrace. And this area here, if you go back and watch my videos about a month ago, I was saying, guys, we might chop around and continue dropping until like the end of the first quarter on Ethereum. Seeing a little bit of a rejection, lose that rejection here, and then finally come down where that golden pocket's in confluence with that lower band. And this would be, late February, early March, where we might come down to 2250, 2150, and then see the real attempt to push up. But for now, we are holding the pitchfork midline on our larger timeframes. And to me, it's even possible that we could come up to 3,600. This area around 3,600 is going to be a very key back test. It is the 4-year long range value area high. You can see it goes all the way back to May of 2021. So for May of 2021, let me just actually extend this. We fell back underneath. We tried to break out of the value area high. We had a bit of a failed auction on high time frames above the value area high. We fell back below it. We bearishly back tested it, and that's where we got our big drop down once we rejected on the bearish back test. We were actually looking for shorts there. You can see our box was there. We were looking for the shorts there. And we were also looking for longs on the test of your non-log golden pocket in confluence with that pitchfork midline. There was also the previous range value area high there of this range was there. So we got that nice bounce. But if you guys remember, we were looking around 3,300 because it's the back test of your anchored VWAP. It was holding as support. Once it holds as support, you expect the bullish momentum to continue. When you lose your anchored VWAP, you'll get a bearish backtest. And if you reject there, it's actually highly likely you take out the lows from your initial drop. So it's likely that we are going to come take out those lows. It could just be some time. This sideways range could continue. So locally, we're just looking at our local support levels, looking at playing this larger range in here until we see a resolution here. Scalp trading, leaving some open just in case the big move happens. If, hedge yourself, look for shorts at the highs of the range, longs at the lows of the range, hedge yourself both ways. And once this range resolves itself, whether we're going to break up here and see a big move up, or we're going to break down, if you position yourself properly within this range, you could be short from the top of the range, long from the bottom of the range, and you just let one get stopped out. You let one run open and continue to make profit. Crypto Clan World, welcome in, man. I hope you had a good Christmas, and thank you for being here. Rocket 89, welcome in. The price of silver. Yeah, let's look at silver real quick. Silver and gold, huh? Silver and gold are like really, oh my gosh, wow. Yes, it is. Holy cow. It is really taken off. Now, be careful, guys. When you see parabolic price action like this, remember when this happened on gold and then gold had a big drop shortly afterwards? Just be careful because this is getting unsustainable here. But wow, we're breaking out of the pitchfork. This is actually quite wild here. Yeah, this looks like a impulsive price action. There you go. That's where I would be looking at $81. So if we're looking at all of this here as impulsive, this clearly is impulsive price action here. This push up. So all of this was a wave 1, a wave 2 here. You're in your wave 3. Your wave 3 generally goes up to the 1.618. Since we're on log scale, we're going to set that to based off log scale. So around $81 or so, we might see a bit of a cool off here, rejection, and then you're going to get your wave 4 corrective move before seeing a 5th wave in here and overall completing where gold could end. I think 121 was a major area where I was looking for gold to end around 120 bucks. Not gold, silver, excuse me. But yeah, this clearly here looks impulsive. And our targets are starting to come up. The 1.618 is one of your common targets to reject, but this could push up to the, higher. It doesn't have to end at the 1.618. So I would just be careful though, because this is now starting to go straight up here. You got to be careful with this. And now that we're breaking out of our pitchfork, you can see that this pitchfork was highly respected. You rejecting, playing around with the band here, the bottom band. It was acting as resistance. Now we break above it, flip it to support, flip it to support, flip it to support. You push up. We had some resistance at the top of your upper band, but held the daily level, and now we're breaking out of the pitchfork here. When you do that, when you break out of your pitchfork, you can look at now making this a more vertical pitchfork. So we can put that to a modified skiff pitchfork, and we're even breaking out of the modified. Okay, wow. It's too aggressive to go with original. But you can see that that would be a good area to end, is right up, coming up into this 1.618 and the back test of that guy. Dang, this thing is wild. And look at the money flow on this thing. Money flow still looks really good. You're not really seeing any bear divs. Actually, NAMI is showing some slight bear divs here on the 3-day time frame. Let me go on to the weekly. Wow, man, this thing looks so strong right now. Once again, be careful. I would not be longing or buying right now. Spot, definitely not be buying spot right now on silver. But is this an all-time high? Okay, wow. All-time high on silver today. I would watch $81, guys. 81 and a half. Yeah, no FOMO. Do not, I mean, first of all, it's just a bad habit to buy all-time highs. I do think this is going to continue, by the way. Money flow still looks really bullish on the weekly time frame. No bear divs, excuse me, on the weekly time frame yet. Money flow just crossing into the red. You did print a hidden bull div on the weekly on that little bit back test of that daily there. So I think this is going to continue, but here's the thing. The overall trend is going to continue up, but within this overall trend, you are going to see pullbacks before making another move up. So, and then like, let's just do a bit of some theory here. This is theoretical, but we'll go from the lows of wave 3, and I'm going to go to the highs of wave 3. I'm just going to put it right on that 1.618. We're going to go to our wave 4 targets, and then we're going to make that based off log scale. So you might see a drop to backtest $45 after rejecting from 81, but we'll see how that plays out. Whoever asked about silver in future live streams, if you're here, you can ask about that, and we'll look at the Elliott wave analysis on high time frames to see. But I think the pullback that we're going to see, if we do reject from $81, $82, the pullback is not going to be like a day or two. It's going to be, a couple weeks, maybe a month or so of a pullback. Generally, your wave 4 pullbacks last as long or longer than your wave 2s. So we would be looking at a pullback of about, gosh, that's a long time. 756 days. Whew. Hopefully not that long, okay? Yeah, I would wait for a cool off as well. Awesome, man. Silver since $20. That's great. I was buying some silver at $18 back in 2020, I think it was. Where was that? 2020. Yeah, it was around 18. I think it was in this area. No, that's 2022. Okay, let's get back to the crypto here. Let's look at Solana for Jafiel. Okay, so on the larger time frames, guys, Solana has been in this upper price action, this upper range for going on close to 2 years now. This was from March of 2024. So going on 2 years, and you can see overall we're at the value area low of the range, and we're ranging between the POC of that range. That's considered the fair value of Solana over the last 2 years. It's around $143. $144, and the value area low, which is considered undervalued for the past 2 years. So we are near the lows here. But what I don't like about what we saw on Solana is we were forming a very, very clear sideways range between the POC and the value area low. Let me hide this smaller profile here. And we got our lows at about 117. We came back up. We made a lower high, and now we're starting to lose the value area low again. That's a bad sign. When you start to lose the value area low after seeing a fake out of it, if this was going to be kind of a deviation of the value area low, you want to get back in it, flip it to support, and continue working your way back up, even if it's just a back test here before. But we didn't, and now we're losing it again. And if we start to close another daily candle, you can see yesterday was our first daily candle open and close below that value area low. To me, it's likely that we are going to continue down, and actually between 107 and 105 is a really good level. I'll show you that in a second here. But we did get the small scalp from our daily level. It was a daily level in here at 112 or 119. And it was also our 786. If you pull that Fibonacci from the lows to the highs, 786, and it was also a daily level. So we got that bounce from that box that we laid out on Monday and Tuesday. Nice little push up. We took out these local highs in here, and we're dropping. But the big thing was, I think, Jaffiel, you asked me about this earlier in the Telegram. And if we look at, larger volume profile, and then we turn on that smaller volume profile. But it's really this larger volume profile. You can see the value area low. This is concerning that we are rejecting from the bearish backtest of that value area low. We bounced from a local support level. We came back up. We tried to get back inside the volume profile. And look at what's happening here over the past couple of days. A bunch of wicks into the volume profile, but we aren't able to really close any candles back inside of our volume profile here. You want to start closing some candles back inside that volume profile. So because we did bounce from local support, came back up, if you fail again, and we took the liquidity up here of these internal highs. So after taking liquidity, you're falling back below it. Now it's likely that we are going to continue down and probably take the liquidity of this 117 low. As far as support levels go, we do have some support, a daily level at 112.75. I don't know why it's on there twice, but 112.75. But the big level is this guy here, between 107 and 105K. Daily order block in there. We have a weekly level in there at 105.81. We have our naked weekly point of control. We have our naked monthly point of control, and we have our naked daily point of control, all within this area, really at like $106. That would be super nice if we did come down there. We would be losing our pitchfork, though. So say we do come down there, we could get a nice long opportunity, but we would have to watch for a larger three-wave corrective move to backtest your value area low. It's going to be in close confluence with that. Let's draw that better. But you would want to, if you come back up and you backtest the value area low in the bottom of the pitchfork and you reject, that's when you could see coming down to take out your $96 lows from earlier this year. Another thing that I was saying about Solana on the higher timeframes is we weren't seeing the bull divs. We wanted to see bull divs down here. If this was going to be this low here at about 117, it was 116.8. But if it was going to be like a major low, you would want to see some nice bull divs. And we did see slight bull divs there. We would want now, even within this higher low, I would want to see another drive of bull divs come in here. So we have 3 drives here, a nice clean bull div, and then you want your bull div here as well, local bull divs. But in order to get that, you have to make a low below 116.8. And also, we're at the value area low of our pretty much 2-year long range. You do not want to start closing weekly candles below $123. If you start to close weekly candles below 123, just like Bitcoin, you could see that bigger drop come in the next couple of weeks. And then if we take off our larger range and we just now look at this sideways range that we've been in, let me turn off all these levels. So if we look at just this sideways range that we have been in between the POC at 144 or 143 and the value area low, I'll show you that real quick before we turn that off again. So POC 143.7, value area low 123. That is our sideways range, a very, very clear sideways range. That's the range we're going to trade until there's a resolution. We're either going to hold this on macro timeframes and really start to break up, come up to probably 177, or what was it, 172, I mean. Or we're going to break this thing down and continue the overall downtrend, which the trend is your friend, and the trend has been down. And I would expect us to at least come to 106, 105, but you're probably going to come take out your lows at $96. $95, whatever that was. 95, yeah. Here's the thing, as far as volume profile trading goes, you have your sideways range of the past 2 years. Let's just estimate this to 2 years. If you cannot hold the value area low, which is your volume support level, that's where the asset is considered undervalued. So if the market was truly bullish on Solana, when it was at undervalued status, you would see buyers stepping in and at least bringing it up to fair value and really wanting to flip fair value and bring it up to value area high where it's overvalued. But if you start to lose and start to close candles, especially high time frame candles underneath the value area low, well, then the only thing left is eventually to come for the liquidity of that range low. We're looking at this as a range. If you cannot hold the volume support of that range, you're going to come for the liquidity at the bottom of the range. And you would expect to see some bounces first, but it's likely that you do come take that liquidity. So Solana's holding on by a thread here. But with Bitcoin, knowing that Bitcoin could break down to 78K or 80.5K, Solana might break down here. And then let me go on to our bearish pitchfork here. Here's the thing with Solana as well. We had our bearish pitchfork pulled from the all-time high down to your $95 lows up to your lower high at 252. We were chopping around. We bounced from the upper band, made a lower high. We got that kind of triangle range in and around the band, and I say this on the channel a lot. We often get these ranges in and around pitchfork bands on high time frame pitchforks. But we dropped to the midline. We had a nice bounce from the midline, but made a corrective, three-wave corrective move, made a lower high, and then we lost the midline, back test rejection, back test rejection, back test rejection, back test rejection. When you reject so many times from your pitchfork, after flipping it to resistance, oftentimes you will grind your way down to the lower band. Well, look at what else is at the lower band. That weekly, that daily, that naked monthly point of control, and your lower pitchfork band. So for me, coming down to 105, at least for me, would be a good day trade long opportunity to bring up to 123. Or even to back test 140. It's not good that we keep rejecting from this midline. And I get that the midline is also your POC. So it's very strong resistance right now. It's really what we need to break above and flip to support. If we want to get more macro timeframe bullish on Solana, we have to break above this POC, flip it to support, and then we could probably work our way up, ultimately up to the value area high. But, at 171, we have some key liquidity, and our anchored VWAPs are also there. If you throw that anchored VWAP on from the all-time high, and you throw your anchored VWAP on from the $96 lows or $95 lows. Oops, wrong thing. You can see those two anchored VWAPs are in perfect confluence in about 171, right where that liquidity is at. So that's going to be a very key area. AXSCB, welcome in, man. I hope you had a good Christmas. Did Didn't even know you were live. Yeah, it's kind of I didn't know what my schedule was going to be like this week, but I wanted to jump in with you guys. I know we've only done one live stream so far this week and a video, so wanted to jump in. I think Sol is done for this cycle. Yeah, Machi HK, I think it is too overall. I think it's done. But even if it's done, that doesn't mean that we can't get somewhat of a retrace up to make a lower high before really, crashing down. And I really did expect the value area low to give us a little bit better of a move. Now here's another thing, guys. On our first move test of the value area low, you can see we were dropping down. We tested the value area low. We got that 3-wave corrective move right here. ABC, 3-wave corrective move. And now this could be a 1, 2, 3, 4, 5. We could be starting a much bigger, impulse to the downside here, about to start. Seeing that 3-wave corrective move ending in liquidity grab here. We shorted that, by the way. Now this could all be the start of another impulse down. So far, it's hard to tell, though, guys, because this is so choppy in here. And you want to see volume kicking in. You generally want to see a nice big trend to the downside. We're not really seeing that yet. And I get that it's holiday, and I get that, it's towards the end of the year and everything, but we still do have hope that this value area low is going to hold. See that rejection there? You bounced from your 119K support, rejected. So I think it's likely that we do come down and take out these lows. Updated link to the chart? Yes, I can. Let's see here. Sharing is on. Jobfield, let's see, copy link here. Okay. There you guys go. That's the link chart. Now, I think if I send the link chart, I think you can still look at Bitcoin. If you just click on my list and you click Bitcoin, it will show you Bitcoin as well, but I'm not sure on that. Looks like I jumped in right on time. Yeah, awesome, man. I'm glad you're here, AXSCB, and I do hope everyone had a good Christmas. Are you looking to enter in a BTC short on this 4th wave retracement? No, I'm not, because I don't want to babysit it. The thing is, we're going into the weekend. It's Friday afternoon, and even if we reject here, I think that it is, first of all, I do think it is likely that we are going to, and actually we're breaking that 382 right now. Or no, we're not quite yet. Okay, let me throw this on. We're right about to hit into that 382. I think we just hit it. Yeah, we just hit the 382, guys. Let's see if we reject from here. And I guess you could. So say you're going to wait here. You're not going to short exactly here. You're going to wait for a little bit of rejection. So say I short here. I'm going to put my stop above that high, and I'm going to be targeting that liquidity at 86,350 as a TP1. That is a 6-to-1 risk to reward ratio, but you got to be careful because this could be part of a larger, 3-wave corrective move. You could get a 3-wave corrective move making a higher low, and then another 3-wave corrective move up to your 0.5. So you would get stopped out essentially before hitting your TP1, and I don't want to sit at the charts all day and wait. Remember, you want your wave 4 to be around the same amount of time or longer than your wave 2. And this was 5 hours and 50 minutes. This so far is about 4 hours and 30 minutes. So it's similar in time. Okay, wait for Sol to get back into single digits. Yeah, man, wouldn't that be great? And if it does, I'm bullish long-term on Solana. I will look to buy some more Solana. If we do start to really drop on Solana, I will be looking for buying some. Man, the thing is, yeah, if this was a flat in here, this was your big wave 3, a wave 4, a wave 5. You could say that Solana really is done for the cycle. This is a wave 1, a wave 2, which was a flat in here. This was all a wave 3. This was your wave 4, and this was your wave 5. Now we're done, and now we're about to see a bigger flush down to your golden pocket. So let's pull that golden pocket from the lows of the impulse to the highs of the impulse, and we're going to turn on golden pocket, but you have to make it based off log scale because that's more than a 100% move. Worst case scenario, Solana could drop to $31, and that actually, damn, I hope it doesn't drop that far. But look at, that's also a very important support resistance flip historically. Support, support, resistance, resistance, resistance. You can see that is very historically support resistance flip. So this would be, if we drop to 31, I'd be buying, selling the house to buy that. But so far, this looks like more of a flat correction in here. So this could be, we could pull our trend-based Fibonacci extinction from the highs here to the lows to your lower high, and we'd be looking between the 1-to-1 and the 1.236. So I would be looking at, you know, $81. That looks pretty good because you do have some nice liquidity down there at 78. You also have that order block right here, this weekly order block. And this weekly order block is going to be a very strong order block because you have this imbalance right afterwards. So you see this order block here and then this strong weekly imbalance candle. So what is that? Between 75, 74.5 and 70. Gosh, that would be nice to bounce from there. Okay, let me check the chat again here. Luciana, welcome in, man. Nice to see you. Which pitchfork do you use on TradingView? It's this tool. So where's it at? Man, I have it favorited for so long, I don't even know which thing it's in. Right here. In the very first tab up here, it's in pitchforks. But here's the thing. You're going to use all four of them just depending on which one, like what trend you're looking at. So it helps to know a little bit about Elliott waves or a little bit about impulsive versus corrective price action. But generally, impulsive price action is a 5-wave move to the upside, right? With your wave 3 being your longest, strongest, most volume-filled wave. That's your most classic impulse is this guy. Now, in a corrective move, you're looking for a 3-wave move, whether that's a 3-wave move down or a 3-wave move up. You know, if you impulse down 1, 2, 3, 4, 5, after the impulse, you're looking for a 3-wave corrective move up to a lower high before continuing down, continuing bearish market structure. Now, in this case, you have a 5-wave impulse up, then you're going to get your 3-wave move. In a sharp correction, it generally retraces to the golden pocket, makes a higher low, and then you continue the impulse up here. But if you're pulling a pitchfork, you kind of have to know where you're at within the impulse. But if you're looking at pulling a pitchfork from the lows of wave 1 to the highs of wave 1 to the lows of wave 2, because you're expecting your third wave to be very strong and aggressive to the upside, you're probably going to want to use an original pitchfork, which is the highest, you know, angle of increase. Now, that's what you would, a modified skiff or a original pitchfork for a wave 3. But like on Bitcoin, for instance, we were looking at, let me just go to a different chart here. All right, here's a clean chart. Now on Bitcoin, for instance, you see we have our 5-wave impulse, right? A wave 1, a wave 2, big push up in a wave 3, a wave 4, a wave 5. And now we could be in what's called a flat correction, coming down to take out your lows at 74K before continuing up here. This could be a flat, is what I've been looking at for the past couple of months here. We have that right here. 5-wave impulse, flat correction, down to your golden pocket at 70K, and then maybe continue up. You did reject perfectly from your flat correction targets between the 1.236 and the 1.382. Also bear divs on the chart. But if we're looking at pulling a pitchfork from the lows of wave 3 to the highs of wave 3 to the lows of wave 4, in this case, because it's not your big third wave, it's your 5th wave, we're looking at a skiff or a modified skiff. So you can see I pulled this pitchfork, and I had this pitchfork on the chart like back in September or August of 2024. I had put this pitchfork on the chart. I was looking at rejecting up here in February and January, when everyone was thinking we were going to drop, pump to like 150K, I was saying, guys, we're going to drop here. We did drop, and so it depends on where you're pulling the pitchfork from, like what part of the impulse or what part of the corrective move. You'll use a skiff, a modified skiff. You just go into your settings. You can change it here on any of them. And for me, the levels that I click, or the Fibonacci areas that I click, is the 0.5. That's your light green lines. The 618, which is your golden pocket, that's your dark green lines. And those two lines make the upper and lower band, right? So this is, I kind of coined this phrase, this is your upper band. This is your lower band. And then, of course, you have your midline and your top and bottom. Now that we have flipped market structure bearishly, we can look at a bearish pitchfork pulled from the all-time high down to those crash lows on October 10th, up to your lower high that you made, and you can look at your bearish pitchfork. Coinbase is better, though, to me, because Coinbase came down and made a new low here because it only went to 107 here, and then it made a new low. So if we look at that Coinbase pitchfork, daily time frame, and let me just hide all this crap in here. I know I should just be doing this. All right, and then let's hide this. But if we look at that bearish pitchfork, you will see that it is highly respected. So midline rejected us. We got that move up. This is why I thought we were going to come a little bit higher. I was going to short here if we took that liquidity from those weekend highs, but we didn't. But you can see we rejected the upper band, tried to break above it, rejected it. Now we're falling below it. So what we could look at right now is, once again, that 0.5 Fibonacci. If we retrace up to the back test of this upper band in confluence with your VWAP, in confluence with your 0.5 Fibonacci, and reject there, then you would expect to come down to make new lows, creating that 1, 2, 3, 4, 5, taking out these lows. But you can see also that 83.5 support. Like, if overall we reject here, we take out those lows, and we now see a higher time frame back test of this thing, we might get that drop to 83K. We'll just keep an eye on it as it develops. Okay, where was that? Can you see? Yep. So can you check JTO? JTO USD? JITO? Ooh, man, I don't know what this is, but it looks like I've done TA on it when it first came out. I don't like this at all. And 2, 3. I mean, it looks bearish. There's nothing else you can say about this as far as higher time frame analysis goes, but it looks like your fair value is pretty much here, and then you're like overvalued is in here. You have that sideways range, and you're breaking it down aggressively here. You've already taken out your lows from that October 10th crash. This is starting to get pretty aggressive in here, and we might see a short squeeze soon on this thing, but I would want to see some daily bull divs coming in. All right, you did have some daily bull divs. Higher lows here, lower lows here. Actually, that ended right here. And then you got that small push up. That was your divs playing out. And now we need a new set of bull divs on the daily. So you don't have bull divs as of now on the daily from after this played out, after this little push played out. So we would want to see some more. So you might get a little bit of a push up here, and then you want to make another low and get some local bull divs on the daily time frame. Money flow, I will say this, money flow is starting to bottom out on the daily time frame, which is good. Now we want to see this little bit of a rise, rejection from a lower high, and then another lower low. And it would be nice if this was quick. And that would give you overall your money flow would still be rising or bottoming out, and then you would get the bull divs to play out. So I don't think it's done dumping yet overall. We might get a few more, maybe another week of upside price action in here. Let me check the 2-day chart. Yeah, because money flow still looks pretty bearish here, but you can see now it's starting to develop some nice bull divs. Actually, before we do that, I just want to check out this trend-based Fibonacci extinction. Yeah, you're even breaking that 1.618 there. There it is. You might drop a little bit more on this thing. Or if we look at one more of these. Either way, but yeah, that you can see we had some nice confluence there in that area. I would be now looking actually at that as being a resistance of some sort. This what is that? 41, 42 cent area is resistance. This is tough though. Like this is one of those very aggressive downtrends where you're going to want to use your pitchfork and you're going to use a very aggressive pitchfork here. Your original pitchfork. Okay, so now let's see if this thing has been respected. Let's go on to like the 8-hour time frame. Yeah, I would say this has been nicely respected. You know, this upper band was acting as resistance. You lost it. You fell below. You tried to get back above, but this was just a corrective move, a 3-wave corrective move. You dropped down. You had some chop in this lower band here. This was a week or so of chop. Lost it, back tested it, came to the bottom. Saw a nice little bounce from the bottom. Now then we lost it. So that's a deviation of the pitchfork because this was a loss of the pitchfork. Then you got back inside of it, back tested it the last couple of days. So I would say that this can be right now classified as a deviation of the bottom of the pitchfork. And now you're inside of it. So I would be looking at pulling a golden pocket from that last big daily high to that low. Let's make that based off log scale. Yep, okay. 46 cents there, okay. Let's do one more. Okay, so there's your two. This order block's actually a really nice order block too. Right here, right at that 39-cent area. You can see this little order block, then another nice continuation down afterwards. That's been taken. Okay, let's look at. Yeah, that's going to be nice right here. Okay, so we have some nice confluence developing between that 40 and 41 cent area. Naked daily there. I would also watch this naked daily just above us. You might see a small pullback from this guy. So we have some levels marked out now. Let's kind of look at this. Wow, this is pretty aggressive down here. I would be pulling a volume profile of kind of this sideways type price action. You're breaking above the value area high. If you can close today above 37 and a half, you're going to continue working your way up here. And then we can also look at pulling a trend-based Fibonacci extinction from the lows, the highs to this lower high. We'll go to the ABC target zone. We're going to take that off log scale. Yeah, 40 cents, man. 40 cents is really looking nice. So you can see your one-to-one, if this is going to just be a three-wave corrective move before continuing down to make those daily bull divs, that 40 cent area, you have your golden pocket there. You have your one-to-one Fibonacci extinction. You have a naked daily point of control in that area. So I would say that is definitely going to be a resistance zone in here. And then the next big area, naked weekly in your daily at your pitchfork band. That's going to be pretty nice too, right in here. Yeah, and you're probably going to get a little bit of a pullback from this area. Daily, naked daily. But I wouldn't, it's probably just going to be like, if you do come up here and start to reject, it's probably just going to be to back test that value area high before continuing. And then this might be the bigger dump from there. You're already starting to develop bear divs on this thing. Higher highs in the price action, lower highs in the momentum waves here. Money flow looks pretty good on the 2 hour, so I wouldn't say they're about quite ready to play out yet. Yeah, 4 hour money flows crossed into the green here. You do look like you could be developing some bear divs very slightly here. I think you're going to come a little bit higher, at least up to that 39 and a half cent, 39 and a half on this current move up of the past 2 days or so. But 41, like that 41 cent area, 40 to 41. And that is also the back, it's a support resistance flip. And that was also your larger trend-based Fibonacci extinctions that we were just looking at. Yeah, starting to develop some bear divs now in here. You can see more regionally on the hourly. You have bear divs from this high to your current highs. And then more locally even, you have higher highs in here, you have lower highs in here, but your money flow looks very strong. And money flow will always overpower those bear divs. So you're going to want to wait for this money flow on the hourly to start topping off, and you want to see continued drives of bear divs. I would say up into your resistance area. All right. Michael Midsal, good evening to you as well. Thank you for being here. Afromond, welcome in. Jitto, yep, we just did that. Okay. I thought the long at 119 was the move to take us back up. Didn't work out though. Yeah, it could have been. And see, AXSCB, the thing is we don't ever know what's going to happen. So if we get the confirmation to long it, we long it. But we also got to remember we're in a larger downtrend and the trend is your friend until the end. So if I long this, I would be playing this as a scalp until proven otherwise, until we really start to break up bullishly. And what you wanted to see was a daily close above 123. If you get that daily close back inside your volume profile, hey man, it's looking good. I think we're going to come take the liquidity at least of these semi-equal highs up here. But if you don't, and especially if you start to reject from this general area, bad news. It's actually likely that you're going to come down and take out these lows. I'm in at 87,500 but I'll full TP the position at 87,000. Okay, you're in a long or a short? We're back testing that pitchfork right now, and also that's going to be that 0.5. Wait, what did I just do here? No, it's the 382. That was just showing you the support resistance flip. I'm going to get rid of that. Uh-oh. Come on. You guys still got me? There we go. Okay. Michael Mitzel, of course, man, and thank you for that comment, man. I appreciate that. I really appreciate that comment. Thank you so much. For more confluence is perfect. Yeah, confluence is what you want, guys. You want to see a bunch of different resistance areas aligning in the same zone, and that's going to make it a stronger level, and that's makes it more likely to reject from that level. So the more confluence, the better. Can we look at AT? Yes, AT. Now, be aware we could reject here, guys, at 87.5. We could reject here, and then we could start to drop. One more question about silver. Would you sell some silver from your stock that you bought years ago, buy back in after retracement? Yes, Dr. Rex, yes, I would. So actually, that's a very, very good question. I'll still go into AT. I just want to cover this really quickly. Say we start coming up, like this is getting unsustainably aggressive, right? But we don't know when this third wave is going to end. It could end at the 1.618, right around $82, 81, $82, but it could keep pushing. It could push straight through it up to, gold did that actually. Gold pushed up past the 1.6. I think gold pushed up to like the 2-to-1 fib extinction. So what I would do is I'm not going to take profit until I see this thing start to cool off here. Say it keeps going, we get a very small pullback and then it breaks through and keeps going. I'm not going to take profit yet, but if we start to come up here, reject, and then start to form a bit of a range where we get a low time frame topping reversal pattern or a Model 2 distribution up here, as soon as we break market structure bearishly by taking out a low, and then we come up for a lower high and reject right here, I would be looking to take some spot. And then, of course, you'd be looking for that retracement, and then I'd look to rebuy it back here. So yes, I would, but we're going to have time to analyze a range in this general area if we need to take spot, if we need to take profit. So look at gold busted. This is what happened with gold, right? You came right up to that 1.618. You saw the rejection. You saw a drop. You actually even broke market structure bearishly by taking out those lows. You broke market structure bearishly, but then look at what happened. Boom, straight up. Got the range, kind of this triangle range right around the 2-to-1, and then it broke up, and look at it, it's still continuing. And I think gold is likely to continue up to the 5,131 area. I think it is going to continue up to that 2.618. But gold, I mean, dude, this thing is powering. It looks still like I think $5,000 gold is coming soon. $5,100 gold is coming soon. Okay, ATUSDTP. Is this the right chart? 5-6. If it is, it's pumping. Okay, this is a very new coin, so there's not a lot to look at in here. LYN. Okay. LYN. Okay. I just want to see if there's. Okay, pretty much the same chart. All right. Well, we have broken market structure bullishly on the daily time frame, so that's good. You can see we had that was your daily lower high. So you were in a bearish structure. Lower low, lower high, lower low, lower high, lower low, lower high, lower low. This was your first time you broke that daily lower high bullishly. So that was your bullish break in market structure. Now you make a higher low here. So now you're expected to make a higher high, and we are. So you're starting to see a change in market structure to bullish change in market structure on the daily time frame. I would really watch out for this liquidity that we're coming up to right now. I think it's likely you at least see some sort of pullback from that area because it's also a pretty nice support resistance flip in here. You can see it was acting as support, resistance, resistance. So now you're at that support resistance flip area just as far as support resistance flips go. Watch for the swing failure pattern of 13 cents. Let's check out some levels on this thing. I mean, that was nice. You look at you busted straight through this daily today. No reaction at all. No real reaction at all. No bear divs on Market Cipher B, but NAMI is starting to show some bear divs. And remember, NAMI is quicker. So you do have already potentially those bear divs. Money flow looks good. You want to see this starting to top out. So I would at least look for this liquidity grab. I'm going to zoom in just a second to see if we actually got it. And it's highly likely that this daily support is going to confirm. That's going to be your at 9, pretty much 10 cents is going to be your new support level. Let's zoom into the 2-hour chart. Yeah, you haven't taken that liquidity just yet. So seeing this pullback before the liquidity grab is actually somewhat bullish. You might pull back to fill some of this imbalance in this candle, and then you might continue to push up. But because you're front running the SFP, it makes it less likely now. Say you even come down to VWAP, it makes it more likely you're going to break through it and keep going. I have no idea what this coin is, but it's pretty bullish right now. Be aware though, on the 2-hour chart from your last high on Monday, you are making bear divs now. And money flow overall is draining out of the asset here. Yeah, 4-hour. No 4-hour bear divs locally. Yeah, not even really. I mean, it looks pretty decent. Money flow is starting to drain out here, but you're not seeing bear divs yet. So I would say even if you pull back, watch. I mean, you might pull back to that 11 cent area to back test that daily that was just busted straight through. Look at, there was no reaction at that daily at all. So sometimes when you bust through a daily like that, you will back test it and flip it to support. Man, that was a pretty aggressive trend, actually. You had your little sideways range at the bottom. You're breaking that range. Kind of back tested. You probably back tested the POC. Let's check that. Yeah, you back tested the POC of that range, and now you are pushing up here pretty aggressively. We can also pull our previous range volume profile, like this guy here. All right, that POC at that weekly is going to be important at 15 cents. I want to check our naked weekly points of control to see if we have a naked weekly point of control there. Because if we do, that's going to be very important. No, not quite there. But it's going to be at the value area high. And we'll check our naked dailies to see if we have a naked daily at that POC right here. Nope. Actually, we don't know because it doesn't go back that far. I bet you there is a naked daily point of control in this area. This guy's going to be important too. Let's do that. And this is tough to count. This is a wave 1, a wave 2. All of this could be a wave 3, but that wave 1 is really tough to count a 5-wave impulse in there. If you look in this, it doesn't look like 1, 2, 1, 2, 3. You know, it just doesn't look good there. But I would pull. Let's do here, exclude that little wick. So this is kind of your current channel. After this sideways range kind of started to end, you're going to pull it from the low here, that higher low, up to this guy. Now I'm excluding the wick. I'm just pulling it here, excluding that wick. And then you're going to pull it up to that first high of that little move up. And yeah, you're breaking out of the channel. I bet you what's going to happen right now is you're going to back test this channel, breakout. If it holds, you're going to push up here. Yeah, Dr. X, absolutely, man. And if you got into silver, awesome, dude. I think long-term gold and silver are gonna continue to make new all-time highs. But like, for instance, that gold, I showed you gold did have some major pullbacks where you could get, like, don't FOMO in on them. You could get big pullbacks that last, a few weeks, a month. Like this was the big pullback that everyone got super scared at, is like gold was going parabolic. And look, it was only once gold started really going parabolic that you got that big pullback. So I would be aware that you could see that on silver coming up soon. But even so, this is the daily time frame, and in this little area, you had time within the range to look for some take profits. Within that little area there, actually was that a double top? Dang, that one was tough there. Double top there. And then you got that move down, but overall the trend is still good. Like I probably would have taken some profit upon the break of this low, and not SFPing it, but just breaking it and dropping. I would have taken some profit upon that break. Of course, you're not catching the all-time high, right? But you have to get out of that mindset that you're always going to catch the exact top and exact bottom. But I would have taken some profit. And then once you started changing market structure down here, that's when you could have re-added to it. You'd have to be watching the chart like on a daily basis, but you made a low, you made a higher low here. This could have been tricky because that could have been a 3-wave corrective move before continuing down, but we didn't. I mean, once you start ranging sideways here, you could have looked at re-entering or rebuying some. For me, gold and silver, it's like super high time frame, long term stuff. So I probably wouldn't have even made that move at all. Any of those moves, but it depends on how you trade it. Okay. I have so many charts opened. Okay, can you look at QBS Quantum Core? Yeah. Um, okay, Uni. pull the gold pitchfork. Okay, gold pitchfork. Well, we can look at some of the high time frame. Yeah, so depends on how far we want to go back with this thing, but we could go back. We can pull the macro pitchfork. Let me just zoom out to the monthly. What is this line here? And I would be looking at that as a skiff. Actually, no, it's even broken out of that. We're going to have to do modified. Okay. So this is, and look at, sure enough, right around that 5,100, you have your pitchfork band coming in. So be aware that 5,100 mark is going to be a pretty big mark. But you see, it rejected the lower band, held the bottom of the pitchfork all in here. Let me get rid of this. Held the bottom of the pitchfork. Then we saw the liquidity grab of those lows. Initially, we were rejecting the bottom of the pitchfork. That's interesting. Rejection, kind of rejection. But you flip that daily to support, and then you broke back inside of it. Small rejection at the lower band. Small little rejection. Broke above it, flipped it to support here. And now we're continuing. But this is pretty important here. Broke above the midline, kind of held it as support, and now we're continuing up. So it's likely that we do continue up to in this general area. That's your more macro pitchfork pulled from 2001. You could look at some lower time frame stuff, like if we're just looking from 2015. Man, but even that thing's going to be straight up. So we use an original because it's so straight up. Wow, you're even breaking out of that. That's wild. Gold is on a heater. Okay, what was that one I was going to look at? QBS. QBS. I'm not seeing it. Is that a stock? Yeah, it looks like it. Oh, this. It's not this. It can't be this. Let me know what the ticker is for that QBS. Okay. We'll look at Uni real quick. Wow, this thing's in a giant weekly range from 2022. Really, it never had a bull market, but I would say this is your range that you're trading. You are coming down near the value area low of the range. I would say that back in November, we hit the value area low. The thing that it concerns me here is look at this could have been like a left shoulder ahead, right shoulder of a corrective move. You have your dump down, you have your corrective move with the topping reversal pattern, and this thing might be about to break down here. That is aggressive though. I mean, that's highly, highly aggressive. Before we do that, we'll mark out some little levels here. It would have been nice to take out this low. We still could. What I would be looking at locally is this little range from this sideways range in here. Yeah, POC is going to be same value area high. It's going to be near your golden pocket. And remember, you're putting that on log scale. Yeah, it's going to be at your golden pocket. So that's going to be important because that's more than a 30% move down, I'm pretty sure. Yeah, 52% move down. So that's got to be a log golden pocket. So that 772 is going to be pretty important. You do have a daily a little bit before that, but starting to get some nice confluence up here. Dang, I bet you since there was a naked weekly up here, there's going to be a naked daily up here as well. And this was also a naked weekly. If I go back to the weekly, naked weekly there. You're not going to mark this one out because the week hasn't closed yet. Okay, so we got some levels to look at here. First off, I got to say this. On the daily time frame, you have broken market structure bullishly. You can see even here, low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low. But breaking this guy right here was your first daily break in market structure. So that was your market structure break. Now, because you broke in market structure bullishly, you are more likely now to put in a higher low before making a higher high. So if you do pull back here, I mean, you have some real nice confluence. You have a daily level at your smaller range value area low. Let's pull our golden pocket from the lows of Thursday, December 18th to the highs. Now, that's going to be a non-log golden pocket because unless that's, let's see here, how much of a move is that? 33%. Yeah, so that's non-log. 786 looks better. All right. So remember, altcoins often pull back more to the 786 than Bitcoin. If Bitcoin pulls back to a golden pocket, the altcoins will usually pull back to a 786. You have your weekly 786 and a naked weekly point of control as a support level down here at around 531 to 520. I know that's a big range there, but for a macro high or low, this could be a good long position. You would also fill in all of this imbalance candle. You have still have some of a fair value gap within this candle on the daily time frame. And then as far as big resistances go, I would say this naked weekly point of control and weekly level here is going to be a pretty big resistance. And then the next big resistance I would actually say is this golden pocket value area high. 769 to 791 or 770 to 791, let's say. Yeah, I think we just have to watch this now. Have you hit that goal? Okay. So you still haven't hit the golden pocket of your wave 3 move down. If we're looking at this as a potential wave 1, wave 2, wave 3, wave 4, and a wave 5, you don't want to impulse down. You want this rather to be a 3-wave corrective move. And then you in that you would make a higher low in that 3-wave corrective move. So you still haven't invalidated this as an impulse until you hit that golden pocket at 609.8, 609.8, or like 610, let's say. But if you hit that, then that makes it more likely that this is going to be a 3-wave corrective move, making a higher low before coming higher. Did we grab that? No, dang. It would have been nice to grab that liquidity there. Because you see, all of this is kind of a liquidity trail. All the people that are shorting this, they're putting their stops. Like if you short this, stop above this high. You short that, you stop above this high. Short that, stop's going to go above these highs or this high. So you have that liquidity trail. And that's why we pushed up so aggressively here. It was probably a short squeeze, sweeping out a lot of this liquidity. Now you've taken a majority of it. Yeah, actually, you've taken pretty much all of it. So this could, you don't want to impulse down here. This you don't want to be an impulse down. If it is, then it's more likely that this, 1, 2, 3, 4, 5, you're going to see a 3-wave corrective move here, and then you're probably going to impulse down another 5, and it's likely to take out these lows and probably come take out this low into your macro value area low. How does this look? It's not good that your money flow is starting to roll over here again, but overall, you did have some nice bull divs here on the chart. Very slight, but you can see bull divs here. And money flow is overall curving to the upside here. So yeah, I think that coming down and hitting this weekly in the 786 could be a decent long. As far as like spot goes on Uniswap, yeah, this would, okay, so you see here lower lows in the price action, higher lows in the momentum waves, nice trigger wave here, and then you made a higher low with a trigger wave here. Your money flow is finally bottomed out and is starting to curve to the upside. Now, NAMI is quicker, and you do not have local bull divs here. You want to see those. Let's go to the daily. Let's see if we see them on the daily. Yeah, you do see them on the daily. So that's nice, at least. And then you have a nice trigger wave here happening. I would think that Uniswap could make some more local highs. You're probably going to pull back for a little bit, and then you could make some more local highs coming up to hit that naked weekly point of control at 717 to 729. Okay, extended. Okay, BTC is moving. Bitcoin is moving. All right, let me check Bitcoin. Is moving. Oh yeah, guys. Oh wait, hold on. Yeah, it's moving a little bit. Let's see. You are breaking above that 0.382 in your pitchfork band. Let's watch around the top of this channel where this POC is. But if you start to remember, your invalidation for the impulse down is 1, 2, 3. You can come all the way up to the 0.5 in a wave 4 before coming down in a wave 5. So let's watch to see if we reject from around that area. But yeah, this looks good. Let's look at our order flow here. just do this. God damn it. Okay, I'm not going to look at that. I don't want to log in front of you guys here. This is nice that this was very locally on the 5-minute. Resistance, you bounce from the midline, and now you're breaking above it and even flipping it very locally. So I do think you're going to continue higher locally. But you are starting to develop 1-minute bear divs. So if we're continuing to build bear divs, remember your POC is here. You don't have to make it up to the 0.5. You could reject from the top of the channel in the POC. So let's see if we continue to develop bear divs. Quantum Core QBS. Okay. QB. I don't see it, man. I'm not sure. Not sure what's going on there. Oh, QBS on Solana. Shoot, we would probably have to look at Dex Screener for that. ICP. I'll look at ICP real quick here. ICP USD. All right. ICP was in this big descending channel. We have a lot of levels marked out here. Let me clean this up first. That's still your daily. Okay. Let me get rid of this. Let me get rid of this. Okay. There's that. So you can see we were in this descending channel. This is kind of the channel that we were following the trend, this descending channel. And we tried to break out of the channel. We fell back inside of it. When you fall back inside of it, we've been obviously grinding around the midline of the channel. But once again, earlier, was that yesterday? We back tested the channel and we still are seeing a rejection. I would think that we're going to continue down locally to take out these lows at 293. You are at the value area low, though, of your range. You can see you didn't quite hit it. So let's see if we can continue down. Actually, I think, did we just take out those lows? No, I would want to come down a little bit more to take out those lows. I'm just checking for naked dailies within this small little area. Okay, this guy is no longer level. All right, so this looks like a 3-wave move too. And the thing is, with a 3-wave corrective move, you often end that C wave on a big spike in volume. You can see that big spike in volume here. But this would be really hard to count as an impulse. You only have one pullback here. Three wave making overall a lower high. Now are we about to come back down is the question. But you are at your value area low of your much bigger range. You see this value area low in here. Money flow looks pretty bad on the daily time frame. And on that high that I was just talking about, that corrective move, you printed a hidden bear div. That is a continuation signal. Look at the last time we saw a little bit of a move up, printed a hidden bear div, and then continued dropping here. So be aware that that could be another kind of fake out. We did finally take the liquidity of this low on December 19th, which was good, and that gave us that big push up. I want to look at the 2-day here. Do we see any bull divs on the 2-day? Yeah, no, we don't. Well, I guess we do. So obviously this wick was from the October 10th crash. It was really big, but between this low here and this low, we do see lower lows on the price action, and we do see higher lows on the momentum waves on Market Cipher B. Now, NAMI does not show that. This looks nice, though. In this descending channel that we've been seeing for the past month or so, continually making lower lows in the price action. And look at this, higher lows, higher lows, higher lows, higher lows. And now your money flow, specifically after confirming that last higher low, money flow is starting to curve to the upside here. And we did print a hidden bull div at the midline. I would really be looking at, let's pull now because there is a real chance here we could make a higher low. We do have to remember we broke market structure bullishly. You know, whether you want to say breaking this high here or even breaking this high here, you broke market structure bullishly. So now we can look at making a higher low. So we'll pull our golden pocket from the lows to the highs. Okay, we've already busted through that golden pocket. What about our 786? Your 786 has not been hit yet, and that 786 would be right below that liquidity we were just looking at 292.3. So for me, coming down to 290 could be a nice level to make a higher low. Yeah, because here's the thing too, your golden pocket is being really chopped through in here. And now it could be acting as a resistance right now, this $3 to like $3.03 area. Why I'm concerned is because we did reject on the bearish back test of the channel. We fell back inside of it. We held the midline for a bit, moved up, bearishly back tested. And generally when you do that, you will drop down and at least take out these local lows. So for me, I'd be waiting to take out 292 or 293 too into your 786 here. But you do have some nice intermediate time frame bull divs. As far as a macro bottom, it doesn't quite look like it could be a macro bottom quite yet. I would be waiting a little bit longer, but you did take out this low here, which was nice. Nice daily SFP of that low. SFP'd the low, pushed up, broke market structure. Money flow leaving, and now is about to roll over on NAMI. That is where you don't want that. You don't want to lose 290. If you lose 290, it's likely you are going to continue down to make new lows. Okay, that looks pretty good. No bear divs locally. NAMI is showing some slight bear divs here, but money flow looks pretty healthy. Let's see if we can't find a smaller range to look at. So let me hide this bigger range. And we can look at kind of this bottoming price action. You can see it kind of starts to bottom in here with a deviation below and then like the deviation above in here. So we'll look at that small sideways range. Yeah, you're trying to hold your POC now. And you did reject the value area high of that range on the back test of the channel. Now for me, I would just be watching, intraday wise. I mean, this is all chop in here. And guys, we do have to remember it's holidays. We're probably going to continue to chop within this small range here. So looking at that 786 at 290, maybe you could look for a long from that area. And then as far as if you do reject from this VWAP right now, or this just general area right now, I do think you'll come down. Okay. Would love to hear your thoughts on optimism. Yeah, okay. Do you have any training or tutorial videos? I don't. I have one video on golden pockets, but if you go onto my channel and you go into playlists, you'll see there's that one. I plan to make more. Okay, let me check optimism here quickly. Guys, I do gotta get going soon. But I will check briefly. We'll check some of these coins. Look at maybe some of the higher time frame stuff. You're kind of, after your crash, you're kind of chopping sideways and down inside of this channel. You're holding the bottom of the channel right now. Money flow on the daily looks really bad, but you are now starting to develop some bull divs in here. Lower lows through all of this, higher lows here. You want that money flow to round out though. And NAMI is not showing local bull divs here. These bull divs already played out with this 3-wave corrective move up here. Man, it's like all-time lows here, huh? I would be looking for coming to take out those crash lows. Now, this is the Coinbase chart. And remember, the Coinbase charts dumped a lot less than other derivative exchange charts. But even like on XRP, we finally came down to take out the crash lows. We still haven't quite done that yet. But if I show you guys XRP here, XRP finally came down and took out those crash lows. It did the same kind of thing, this sideways and down channel here until we came down and we grabbed that. It was a double bottom. It technically was a liquidity grab. It wasn't a very nice one. And that's why I do think we could come down again to actually like wick past it a little bit. But we're looking at something similar on optimism right now. So I would be looking at potentially coming down to take out the liquidity at 23 cents, 23.4. And you could be looking at some sort of like contracting diagonal in here. Four-hour is showing some bull divs. Look at this on NAMI. Hidden bull div, bull div. So you're seeing bull divs within this last little chunk in here. Bull divs. Money flow starting to bottom out on the 4-hour. Let's look the 2-hour. Yeah, bull divs, money flow is now starting to come up here. Bull divs in here. You're reclaiming your channel and you took out this liquidity. So you took out this liquidity here. You're reclaiming the channel. I would think that you're probably going to sweep all of this locally, all of this here. So I would be looking to continue up to at least sweep that up to whatever, 28.4. You're probably going to come up to 28.4. But you can pull a golden pocket from your last kind of big highs to those lows. Yeah, golden pocket's going to be around your midline. So And then you could look at this smaller range as a sideways range in here that is probably starting to develop, because this was a pretty sharp crash here. So you don't want to include that in there. Okay, value area highs right around your golden pocket. Let's look at our naked daily points of control. You do have a naked daily right near your 786. Having these two naked dailies before sweeping 28.4 is kind of troubling. Okay. So let's, if you really wanted to get into the weeds on this thing, you could pull your super small time frame golden pocket from this little corrective area here, or this little not corrective area, channel, and that 786 is going to have that naked daily there. You've already rejected from the golden pocket, but you can see this area here might be a little bit of a rejection area too. But overall, because we're seeing intermediate time frame bull divs, I think it is possible that you're going to kind of sweep up to grab these highs here, and possibly even this guy. Sweep this. Pepe. Wait, Pepe. Yeah, we were in this corrective channel here. We front ran this support just barely. This can be pulled to here. You guys, the thing with Pepe and these coins is these are meme coins. So like once the hype dies down, this could just keep bleeding off like until it almost hits zero, and kind of be careful with coins that don't really have a use case, but it's just based off hype and, you know, I hate to say it, but like junk. So we'll mark this as a weekly. We get rid of this one. And even in here, you can see how you started going sideways in here. But what happened is you came down, you made a double bottom, you had a 3-wave corrective move up to take out the liquidity, and now you're dumping down to take out the liquidity of the lows. So the market makers just stopped out within this small sideways range, the liquidity of the highs and the lows. And now I bet you we're right around value area low of that range. So let's look at the sideways range. Let's pull our volume profile. Yep, right around value area low of the range. So you deviated the value area low. You were able to break back inside of it, and you're holding it in the back test, but you're not clearly breaking above the POC yet. You want to start to flip this POC to support, and we're struggling here. You can see it's been struggling to get above it. If we can, it's highly likely we move up to the value area high, and that's also where your golden pocket is going to be close by. Yeah. Golden pocket's right up in there. So I'd be looking at that golden pocket value area high, and then we can look at those. Let's see if there's a naked weekly in there. Yeah, naked weekly point of control is also there. Right at that value area high, golden pocket. So that's where I'd be looking. This is a major resistance here. 0.000045 ish. We have to be careful if this is going to be an A wave, a B wave, a C wave up to here, 3-wave corrective move. You could tumble right back down. This did look nice though. Look at all these bull divs here. Now those bull divs give you that little bit of push up, and now you have a trigger wave with a higher low at the value area low, holding the value area low. You want to start to close candles above this POC, and then you would have to watch out for the liquidity grab. If you don't get the liquidity grab, it's highly likely you move up to golden pocket. If you do get this little liquidity grab, then unfortunately, you're probably just going to drop right back down. But look at this. Look. This was lower lows in here, higher lows in here. You're now bouncing a second test on your value area low. You bounced. You need to start breaking above this. Short could be that 45 area. Then you could pull your golden pocket from the dead cat bounce highs to the lows. Now, I believe that is more than a 30% drop. And the bearish backtest of your channel would be a very big thing. So this was your channel. If you do come up here, you'd have to watch for that. Yeah, and that's also going to be kind of around your prior lows. You can see all these, low in here, chop in around here. So that's going to be a pretty important support resistance flip area. Okay. Yeah, guys, please hit the like button. If you get any sort of insight into the market from this video today, please hit the like button for me. Remember, if you do want to sign up for the Telegram, link is in the description. All you have to do is sign up with BYDFI using my affiliate link, deposit $100 into the exchange. That $100 is your money to trade with. You'll get 20% discounts on trading fees, and you can earn a 50% deposit bonus. And then once you've done that, click the Telegram link. And once you're in that Telegram channel, type in /verify in your user ID, which will be right up here. And that'll get you access to that Telegram community where you can tag me, ask me questions, kind of see my thoughts on the market, trade setups that I'm getting into. Yes. Okay. SPX 6900. Let's check that real quick. SPX 6900. Guys, give me one. I gotta send a text here. Give me 1 second. All right, I'm back. Felix, what's up, man? It's good to see you in here. How are you doing? Made good profit on the move up this morning on Bitcoin. Awesome. I'm pretty sure SPX 6900 is a meme coin type of thing too. Let me check to see if Bybit has more. I guess. Yeah, we took out the lows here. Now Coinbase had this big wick, but other exchanges, or at least Bybit, didn't. But you can see we're down at those lows and we're holding those lows as support overall. So it looks like that's kind of our bottoming area. We can look at pulling a volume profile of this sideways range here. Yeah, holding the value area low, and we're breaking above the POC here on the daily time frame. We took out this daily, and we had a daily in here. You could see this daily. You flipped it as support in a higher low, and now you're continuing up. So within this small area, did we take this liquidity? Yeah, we took that liquidity today. So be careful because you did have an SFP. You see that clean SFP right here. Bouncing from the POC, but we need to see if this is going to be a bounce. Actually, money flow looks really strong here. So I would say it's more likely that this is not this, but it's more likely to be bounce and continue pushing higher. So let's pull a golden pocket from the range highs to the lows. And because that is going to be, I believe that's more than a 30% drop. Yeah, 41%. So we're going to put this on log scale. Oh, it is on log scale. Okay. There is something we need to be aware of here because this could be a wave one. There is 5 waves in here, a wave two, an internal wave one, an internal wave two, and all of this is your third wave here. And this is kind of your 1-2s, in here. And then we could be looking at now seeing a 4, 5, 4, 5. If you have 2 1-2s, you're looking for 2 4 5s. But this is nice. Bull divs coming into that value area low. Now you've created some nice trigger waves here, making a higher low into that daily support that was a daily support level. Money flow is curving nicely to the upside here. Possible bear divs coming in. That SFP was not ideal of this high here. That was not ideal because you could just be ranging here over the holiday weekend on SPX. And I wouldn't be surprised if we do fall all the way back down and hit the value area low again, but it's more likely that we are going to continue breaking up here. Okay, that golden pocket has already been hit there. Okay, so that's used up. No, overall, I'd play this bigger range. We are kind of finding some bottoming momentum with the crash from October 10th and these 2 lows in here. You did have bull divs here on the 4-hour. Let's check our 8-hour. 8-hour time frame is really good to look for bull divs. Yeah, bull div. Money flow is now starting to curve to the upside here. It does look like we could probably push this up a little bit higher. And we're also above the POC and very locally holding it as support now. So I would think that you are likely to move up to this general area of the golden pocket value area high. This I want to pull there. Okay. And then let's look at some naked daily points of control in this guy. Yeah, your golden pocket and your value area high both have naked dailies. So those are going to be 2 big areas to watch. Even this above this liquidity grab into this naked daily is nice. I want to see if we have a higher time frame naked weekly at that golden pocket. We do. So that's that's your area, man, right there. Naked weekly point of control at your golden pocket, 61 to 62 cents. We might get a push up to there. It would sweep out a lot of the liquidity of these lower highs in here. And from that area, you just have to watch to see, you really don't want to reject that and start to impulse down. Like if this is aggressive here, it's not looking good. But if you reject there and kind of chop for a bit, you could start to push up here. Yeah, and this low not being taken, oops, wrong one. It would have been nicer to come take this low. Let's just say that. Would have given you another drive of bull div, and then you could look at some impulsive price action. But if this was all a wave one, your wave two retracing like 90% of the way, 95% of the way is not good to see like than a wave three here. It's more likely that this could be some sort of flat correction where you come up to take out the highs and then come right back down. But I would just be watching that 62.5 cent area, 62 cent area. Looks pretty strong. And then if you break above that, 65 cents is also a naked daily in your value area high. Daily time frame, larger time frames. Yeah, money flow doesn't look the best. So because of that, but because we are seeing on the 4 hour, 8 hour, we're seeing bull divs, but the daily, the money flow still looks pretty kind of crappy. We did see some bull divs here on the daily, and they're starting to play out with this trigger wave, making a higher low. You're likely to move up at least to 62 cents. But because the daily time frame, you want to see this start rounding off here, and it would be nice to create bull div. So if we do this and then come down and sweep not only this low but this low, and you see that bull divs and your money flow is now starting to kind of curve up here, this long could be a really good long. And you could even pull your channel. It's going to be almost a flat channel, but look at this is your channel here. So from this high to this high, but it already rejected the third time. And seeing that sweep into the bottom of the channel, this is kind of your exhaustive price action, selling exhaustion. So anytime you're near the lows down here, you're starting to confirm exhaustion already. This is good long opportunity. Okay. Yeah, let me check. Coinbase chart doesn't have as much history. Okay. QBS. I'm trying to find it. Adrian, I'm trying to find it. QBS. I mean, even QBS, I typed in Quantum Core. Is this is the only QBS I see. But if I type in Quantum Core, I don't see anything in here. Oh, it's against Solana. That's right, huh? Well, let's go to this. Let's do ooh. I mean, honestly, this looks like a rug to me, dude. Like pumped up initial listing, instantly sold off, and now it's just sitting at a floor here. Almost no activity. I would be very, very careful with this, man. Very careful. Yeah, look at this. There is no. I personally wouldn't touch this with a 10-foot pole, man. This thing had its pump, had its dump, and now it's literally no trading volume at all. Just grinding sideways. And yeah, man, and look at this. It's like very small amounts of money are being traded here. It looks like bots are trading this now to me. It looks like it's pump and dump, and then this is just pure bot trading and very little humans in there doing that. Just be careful with this, bro. Like, if I understand it's a newer coin and there's opportunity, but anytime you see an initial pump listing like this, huge pump here, yeah, you had some hype in here. You tried, it was looking bullish here. Actually, it was kind of a triangle in there, but you had your triangle forming here, and then it dumped down. But this is bearish, and since the bearish momentum played out, you're grinding sideways, no activity at all. You're pretty much actually at all-time lows on this thing, almost. I don't know if there's volume profiles here. I would be looking at pulling a channel and trading that sideways channel. But this is like, we're zoomed in quite a bit here. I mean, the one thing you could look at is if you do come down and take out the liquidity of the lows and get back above it, you could look to buy some, but just be very careful because you might move up. Let's pull our golden pocket real quick from this high to, let's just pull it to liquidity grab here. Yeah, coming up, man, even that, let's do this here. Your 0.5 Fibonacci would be right at that midline. Of course, that's your equilibrium, and that's what a midline is. Man, I would just be careful. Actually, even your 382. So your 382 acts as strong support or strong resistance in a strong trend. I wouldn't say this is a sideways range, but at least this part of it has been a very strong trend down. So if you take liquidity, I would look at possibly taking profit at that 382 because look at, historically, it's also a support resistance flip. Resistance, resistance, support, support. So that this area right here, if we throw on a horizontal line, you will see that that is a nice support resistance flip. Resistance, break above it, fall below it, resistance, 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 break above it. And now it's acting as, well, let me get this out of the way. And now it's acting as resistance or support in here. So nice support resistance flip. But this looks shady AF to me. I do think Sui's a strong project. In my videos, one of the coins that I do cover is Sui because I like Sui a lot. Now, Sui has been at the bottom of this pitchfork for quite some time now. Also, on Sui, we had very clear impulsive price action here. This was very clearly impulsive price action. After your impulse finishes, you're looking for a corrective move. Now, we could say this is a big flat correction in here. Just like Bitcoin, we're looking at a big flat correction. And so what I've been looking at primarily on Sui is our trend-based Fibonacci extinction. If we turn on those going from the highs of your A wave to the lows of your A wave to the highs of your B wave, you can see that the 1-to-1 Fibonacci and the 1.236 are your levels to watch. Well, the 1-to-1 is pretty much at the bottom of the pitchfork where we've been chopping right now. This could end up holding, and we could make a move up to the midline and to retest that value area low. If it doesn't hold, and I don't like how we're not making bull divs here. I don't like how we keep making higher lows in here. That to me is bad, and we might sweep that liquidity at 130. But if we do start to lose the pitchfork, then I will be looking at this 1.236 because also there's a golden pocket there. Yeah, we're looking at this bigger ABC here, and there is a golden pocket. You can see this golden pocket. Now, this is a logarithmic golden pocket because this was more than a 100% pump to the upside. You have to put that on log scale. And at about 109, you can see your 1.236, your 0.65 Fibonacci, and you have this nice daily order block right here. Look at that daily order block. And then you have imbalance right afterwards. So if we did come down to 109, man, I would look for a long there. It would also potentially, depending on how fast we move down there, like say we're chopping in this for a bit and then we lose it and quickly move down there, you could start developing some nice bull divs here. But look at your daily money flow looks bearish here. That's bad to me. So maybe we're going to get continued. We want to see this thing continue to round out here. And you want to see this money flow start to bottom out and start to come up. So 109 looks pretty good to me. I don't like the way we are consolidating at the bottom of this pitchfork. I just don't like it. Here. So now if we zoom in and we look at that little range, we are at this sideways bottoming range at the bottom of the pitchfork. You're below the value area low and you've been chopping below it for quite a bit here. And you keep making these barely higher lows here. Or actually, you did take liquidity at the first low. This guy here, and we called that long, that liquidity grab long. But we did reject. You can see, let me hide this for a second. We took the liquidity of this low. We pushed up very quick. We rejected our resistance. This was a golden pocket, and this was the top of your pitchfork band. You lost it. You bearishly backtested, bearishly backtested, bearishly backtested. Couldn't get, and now you dropped all the way to the bottom of the pitchfork again. To me, it's most likely that this downtrend in here continues until we take the liquidity at 130. I do have to say this is setting up for a nice short squeeze. Look at all this liquidity in here. Say we continue to grind down here, take that. This could squeeze us if we can keep grinding in this channel until you take that liquidity. And overall, it's still your sideways range. But Sui's a great project. I like Sui a lot. Absolutely, Adrian. It took me a while to find it. I guess I just had to look on Deck Screener, but just please be careful with that. Like, I'm not trying to tell you what to do or anything, what to buy, what to trade, anything like that. I just those coins can be shady. Okay, yes, that QBS looks like a rug pull. Yeah, it does. Make sure it's not one of the Carl Moon rug pulls. He's good at that. Oh gosh, yeah, you're right, Mind Tapestry. All right, let me check Bitcoin. I'm gonna check Bitcoin real quick, guys, and then I'm gonna head out. You guys have a good holiday weekend. I will be back to my normal schedule next week. What's going on here? All right, let me go low time frame. Okay, we did come up to that POC, and we are starting to kind of reject that POC now at the top of the channel, but doesn't look too bad here. You are starting to develop some bear divs. Higher highs, lower highs. Maybe not on NAMI. I don't know. It's hard to see. Yeah, very slight bear divs developing. Actually, no, not on 5 minute. We're back inside the pitchfork band, okay, of the bearish pitchfork. So you can see here what's going to happen here. We just rejected that POC, but if we do this and can kind of hold this, we are going to work our way up to that 0.5, which will be at the top of the channel again. And your VWAP is going to be right around that area. Okay, by the time, say we do something like this, just watch that. VWAP's going to be there. Now, if you break above that, this could be a nice 1, 2, 3 wave corrective move, and now you're about to impulse up out of here and take out those. If we do hold this and start to hit your golden pocket, like so now you could pull that golden pocket from the highs of wave 3 to the lows, and you hit this golden pocket here, I think it's highly likely that that was a 3-wave corrective move, and we probably are going to come up and take out you're going to come up to 91K. 91 to 91.5K, where you have your golden pocket up there. You have a bunch up there. You have your weekend highs. You have a golden pocket. You have your golden pockets at like 91K. The top of your pitchforks up there. I mean, it's likely that you do come up there. Your value area high was also up there. Not this one. Value area high is a little bit higher, but it's pretty much in that same area. 91.5 to 91K. But guys, just remember, holiday weekend, it's probably going to be low volume, correct, sideways chop, or maybe a little bit of scalp up and down. But unless you want to sit at the charts and babysit trades, go enjoy some time during the holidays, reset your mind, go out, have a good time, whether you do something social or you just do something with your own. Get away from the charts for a bit, because it can actually help you reset and then come back focused when the actual volume kicks in next week, next Monday, and get back to it. You might sit at the charts this entire weekend, win 2 or 3 scalp trades, or win 5, lose 2, something like that, win 5, lose 3. You wasted your entire weekend stressed out. You're burnt out because you've been staring at the charts trying to scalp trade, which takes a lot of energy and time and babysitting. And then next week, when the nice trades could start to play out, you're off your game because of it. So just you got to have good balance there. All right. Let me see. I'll check COAI real quickly, and then I really am going to get going, guys. COAI. Dang. Yeah, this is kind of crappy looking too. Okay, that pitchfork is shot. I will say this, it is starting to bottom out, like your momentum, your selling momentum is coming off. You're near the all-time lows on this thing, but you are starting to see that selling momentum kind of bottom out here. So I don't know what this is, but if you're bullish on it overall, buying, at the bottoms of this kind of sideways range, this sideways range is not a bad idea if you're bullish on it long term and you know the fundamentals of it. But yeah, I also would be concerned about this. Wick sold off. 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 Wicks sold off. Every push up, you're getting sell-offs. I would play a sideways range. This is your sideways range you're looking at. You can pull your volume profile for that sideways range. You're below the value area low. You lost it. You even kind of came up for a bearish back test and rejected. You did take the liquidity at the bottom, this little wick here, and now you're starting to push back into your range, your sideways range. But the very first level to watch is this high into the bearish backtest of the value area low at 47 cents, because you could just come up there, reject on the bearish backtest, and continue this downwards momentum. I would also pull my golden pocket from that last high to low. Okay, and let's see, is that more than 30%? Yeah, that is. So we'll. Yeah, okay, so that golden pocket at the POC is going to be pretty important. And then I bet you there's a naked daily or a naked weekly there as well. Probably not a naked weekly. Yeah, you have a naked daily there. So that's definitely your resistance. This golden pocket with your naked daily point of control at 53 cents, 53 to 54. Actually, wait, did we have anything else? That's your resistance. Your 786 is going to be right where your value area high is. So those are your two levels to watch. This guy in here. And remember, your overall momentum is bearish. Lower lows, lower highs, lower lows, lower highs, lower lows. I would personally wait for some sort of change in market structure. You know, you've got your lower low, lower high, lower low, lower high. You might continue down here. You don't really see bull divs on this on the 4-hour time frame. Let's go to the 1 hour and see if we saw 1 hour bull divs. No, not even really 1 hour bull divs on this thing. Money flow looks pretty bearish here. Shoot, with this guy, this is your bigger sideways range we're looking at, but you might even range here over the holiday. I'm still in holiday mood. Awesome. ZMX, welcome in, man, by the way. And good for you. Good for you. Yeah, biggest losses happen during weekends. Remember, there's lower liquidity at the weekends, guys, and it takes less to move the market. You can get wicked out or stopped out easier. All right, guys, I'm done for today. Thank you so much for joining. I will be live again on Tuesday, 2 p.m. Eastern Standard Time. Now, Thursday, I'm not so sure if I'm going to be doing a live on New Year's Day, but I'll keep you guys updated once I figure out more of what's going on next week. Thank you all so much. Merry Christmas to you all. I hope you all did have a good Christmas, and stay safe, get some rest, have some balance. I will see you next time. Hit the like button.